the interest of time, why don't we get things rolling? We've got a few people in, and we are recording today, as with most of our webinars. So if anyone comes in late or if you happen to miss anything, we will be sending it. Anyway, my name's Jasper. I work with Score Main, and thanks for joining us today. This is our workshop on business loan application or bank loan application tips, hosted by Nate here. He's a expert. He works with Kennebec Savings and is an subject expert on this subject. I want to thank him for making this possible. And if you, like I said, if you've got any questions, feel free to queue them up in the Q&A tab or in the chat. And without further ado, Nate, why don't you take us away?
Sounds great. Well, I'm happy to be here, and happy to Kennebec for giving me the time, and happy to Score for having me back. So,
Yeah,
thank you all
glad
for
to have
joining. Jasper will be monitoring the chat throughout. So, if you do have questions, feel free to throw those out. And it does, we'll have time for questions at the end, but happy to be interrupted and kind of address any questions, because each business is a little bit different, which is part of what we'll be talking about today. So. Let me share my screen. I'll tell you a little bit more about me, and we'll get into it. And Jasper, can you confirm everybody you can see the Score presentation, correct?
I can see it. I would hope that means everyone else can.
Okay, perfect. We'll get started then. I'm not a technology expert, but I can talk about business loans. So a little bit of background about me. I'll go ahead here. So I grew up in the Bangor, Maine area, working for my family's business up in that area, which is a bridal shop. So I started working there when I was about 15 and worked through there through high school and into college. Talk about a very specific industry, a very specific type of business, you learn a lot. Every customer, it's the most important day of their life. So you really learn how to try to deliver that experience. So it was a great experience, really valued the entrepreneurial spirit that my family had, and wanted to be able to help people, start their own businesses with my career. So as alluded to, I work at Kennebec Savings Bank as a commercial loan portfolio manager. So I help manage the large commercial book of business, as well as maintaining my own loan relationships. I moved down from Bangor and went to the University of Southern Maine, where I studied business management with a focus in entrepreneurship and sustainability, and minored in economics. It was around that time I also did an internship with the Maine Small Business Development Center, which we'll talk a little bit more about today. But they're a group of business advisors that sit in Southern Maine here, and that is a program funded by the SBA, similar to SCORE, very much a partner organization. I serve on various nonprofit boards throughout the Southern Maine, Portland area. Most notably, I would say I serve on the Portland Regional Chamber of Commerce Board, as well as the Portland Development Corporation Board. So both of those have a really strong tie to the business community, and are just one of many resources available to people starting a business, owning a business, interested in business in Southern Maine, especially within that Cumberland County.
Hey, sorry to interrupt, Nate. I've got a message about the audio bouncing around. Is that the case for everyone here? The audio is fine on my end. You're coming through pretty clear, no echo for me. If people want to throw that. All right, Arthur, if you may want to check your personal computer settings, maybe turn it down, or yeah, I'm sorry that's happening for you. I'm not sure.
Okay, I will continue and hope that gets resolved. So, yeah, just a little bit about me and we can get started. So, some of the most important things about applying for any sort of business financing, business loans, is it sounds really simple, but it's really important to have a good understanding of your business. And I'm going to be talking about businesses as if they are, established, but this applies to starting a business as well. So I've financed a lot of startups through different SBA loan programs, but I've also worked with generational businesses. a lot of the questions that as a loan officer is going to have for you are going to be very similar. So I'll bounce around kind of highlighting very specific pieces of financing for a startup business as well as an established business. So again, the most important thing is having a strong understanding of your business, because what your job is articulating your business to someone who may not know it. It may be an industry that is unfamiliar to a loan officer, it may be an industry that is familiar to a loan officer, but each business is going to have its own nuances because of who you are. So things that are going to come up in conversation are going to be, the age of your business. And that could be when you established it, potentially an LLC, an S Corp, a C Corp, a DBA under your own social, or it could be when you started taking customers. And being able to answer those questions is going to be very important. So if you're an existing business, what does the past of your business look like? Was it a part-time thing? Were you working out of your house? Did you lease space? Were you in a partnership agreement and have bought a partner out? Was it a business that you purchased from someone? Potentially you were working with someone for years and they went to retire and you bought into the business to lead it into the future. Being able to address questions about the past of the business, as well as where your business is today, and then where your business is going to be going. So whether you're an established business or a startup, talking about how a loan is going to impact the current situation of your business and the future of your business is really important. Sometimes that loan is taking the concept and bringing the business into the reality. So it could be saying, right now it's an idea on paper, and this loan is going to bring me to the future of my business, which is going to be doors open and helping customers. So being able to articulate that is really important in applying for any sort of business lending. Understanding the value of your business. How much of the value of the business is tied to you as an owner? I think we all have examples of where we've went into a business and the business is Steve Smith, or it's the owner of the business, it's their relationships, it's their knowledge of the industry. And it would be really challenging for someone else to come in there and continue to lead that business. That doesn't mean you don't qualify for financing. There's plenty of strong businesses that have that kind of a model, but being able to explain that and say, the reason this business is successful and better than the competitors down the street is because of the relationships that I have as the business owner. But also understanding the financials of your business. You don't have to be an expert. No banker is going to expect you to be an accountant and know every detail of every line item of a profit and loss, but being able to track your finances or bring financial projections to someone is going to show that you've taken the time to understand, look under every rock, really try to understand what's under the hood of your business. And I'm going to do a little plug for SCORE here. One thing that I have done as a loan officer many times is refer potential business owners, startup businesses, existing businesses that need help with their finances to SCORE, as well as the SBDC. Sitting down with a mentor who does have a background in finance, who can meet with you and help articulate the numbers so you have a stronger understanding, and then you can go to a lender and demonstrate that understanding. There's no fault to asking for help. A lot of running a business is asking for help, and SCORE is a wonderful free resource for you. But also don't be afraid to ask a lender. You can ask your lender questions saying, here's my finances. I understand some of it, but they're open to you not knowing it all. As a lender, I would rather have you admit that you may not understand something or want to talk about the details of something, and I can hopefully help explain it to you in non-banker jargon. And then you leave feeling more confident about your business than you pretending you understand something that maybe you don't. So, everybody works in a very specific field, especially when you're a business owner. You may be a great restaurant owner. That does not mean you're a great CPA. So, it's okay to ask for help. It's okay to not know it all. But understanding that you might not know it all and trying to bring in the right resources to help you is really important. Sorry, I was a little long-winded there. Other things that impact the value of your business is things you may have for inventory and equipment. So a contractor is going to have timber, tools, usually some expensive equipment. A restaurant owner may have an oven, may have some perishable goods. Those things are going to be what is available for collateral for most loans. So if you're purchasing a vehicle for your business, that vehicle is the second form of repayment of a loan if you were not able to make it through the normal operational income from the business. So that's important to know. Does your business have equipment? Does it not? What is your inventory? How long has it been sitting there? So I'll use an example from Henry's Bridal. When I started working there, the business had already been in operation for about 15 years, and it was purchased from someone prior. So there was some inventory that had no value. And one thing that my family had to do was clear out the inventory because they were paying insurance on it. But I can tell you this, a prom dress from 1980 was not carrying very much value sitting upstairs in the shop. So really being able to understand the value of your inventory. Sure, it's not, we have 10 dresses. The average sale price of a wedding dress is $300. That's how much our collateral is. You know, you may have one dress that's worth X, and then you may have one that's, you couldn't give it away. So really understanding your inventory beyond just the surface level of this is what we have for equipment. I've walked through warehouses where there's broken pieces of equipment, things like that. The bank's not going to want to take that as collateral, and you're not going to want to be paying for insurance on it. So really kind of keeping stock of what's still valuable and what's gone bad. And that's really that useful life piece, is the useful life of your inventory, useful life of your equipment. And then another big thing is knowing your short-term and long-term goals. You know, not every loan is going to be to make your business necessarily more profitable. Sometimes it's a long-term goal to help make your business easier to pass on to a future generation. So a loan that I was recently working on had to do with solar and converting some raw land into a solar field. That solar field is going to allow that business to be much more sustainable long term, but it's not bringing in new income, you know, tomorrow. The borrower was able to articulate their plan for their business and how this project was going to help them reach that, and their way to repay that loan looked a little different. Now, if you are applying, if you just signed a lease and you need to build out a space for a restaurant, a gift shop, a record store bar, you know, there's a lot of different bar combinations, I would say, in Portland. So board game store, board game bar, cafe bar, whatever you're doing for a business. If you have a lease space, your short-term and long-term goals may be very similar. It's going to be dictated on how long your lease is, and it's going to be about building out that space within a budget that you're going to be able to afford to pay a loan for those 5 years. One thing to know is that if you're doing a loan that's going to be considered what we call FF&E, so furniture, fixtures, and equipment, and it's going into a leased space, the bank loan is going to be no longer than what your lease term is. So, you know, with a personal mortgage, you may see those up to 30 years. They're not going to do a business loan up to 30 years because your lease may be only good for 5 to 7 years. So that's an important thing in understanding the useful life and understanding, you know, what that structure of a loan may look like. This is information your SCORE mentor will have as well. So when they're working through financial projections, they're usually talking to banks on a regular basis and can help you project what your cost of financing is going to be as well. Any questions so far? Hearing none, I will continue. So, you know, those are some important things to understand your business. When you're applying for financing, it's really important to understand your business. Here are some of the nuances of applying for actual lending. What are the loan funds going to be used for? I've had businesses talk to me about applying for lines of credit. Well, sometimes lines of credit can be a great tool, but there's times that it isn't the right tool for what the business may be looking to do. So if it's buying equipment, then there are certain term loans that you may want to utilize because you're going to be paying on that loan for a longer period of time. If it's to cover a short-term cash flow need, you know, let's say your customer is paying you on 60-day terms. So you offer them an invoice, they have 60 days to pay you. Well, most of you have probably worked for someone else before. If you were an employee, you probably wouldn't be wanting to get paid on 60-day terms. So employees are getting paid weekly or biweekly. Your electric bill is getting paid monthly. Your lease is getting paid monthly. Your bank loan is getting paid monthly. So you're incurring all of these expenses when your customer is only incurring an expense every 60 days. So you need some capital, some cash to be able to cover your expenses while you're waiting on repayment from your customer. And that period when you're waiting for repayment from your customer is referred to as accounts receivables. So if you're issuing an invoice, then you have an accounts receivables. A restaurant down the street or a cafe doesn't tend to have very many accounts receivables because most of their customers are paying at the time that they're receiving the good. They may have relationships with other restaurants or other vendors that pay monthly or every couple of weeks. So they may have a small accounts receivables, but if your business is based on issuing invoices, you're going to need some tools for capital to make sure that you can cover your expenses while you're waiting to be repaid. So that's one thing that you'll hear a lot is working capital is referred to the cash that you're using to pay your day-to-day operating expenses while you're waiting for funding to come in.
Hey,
One,
Nate, we've got a great question on topic about this too from one of our mentors, Kathleen O'Donnell.
yeah,
She's wondering, would you advise a business owner to shop around multiple lenders for a loan?
yes. So that's a great question, and I'll talk about it. I have some points on working with banks down in a few slides, but to address that question, I would encourage talking to multiple banks. Um, I would say that it could impact your timeline. So, making sure that you're leaving yourself enough time to have strong conversations with multiple lenders to understand who's going to be the best fit. Because if you only allow yourself a week to meet with banks and then you have to make a decision, it can create a rush and not a positive experience, I would say, for the lender as well as you as a business owner. I think one of the best things you can do is start a conversation with a bank as early as possible. You'll want to have some things in place, but a good lender, even if you don't have things in place, will meet with you and put you on the right path, refer you to SCORE. So I know that a lot of people that I've met with haven't met with SCORE or the Small Business Development Center, and they may just have an idea or a business plan written down on a couple pages. So I say, okay, this is a great start. Here's some things you're going to want to think about, and go talk to Kathleen or go talk to, someone who can kind of take you to that next step, and we'll continue to work together. What you don't want to do is say, I've signed a lease. I have 30 days to get approved for a loan. Now let me start the conversation with 4 different banks. That puts you in a tough situation, and it puts the lender in a tough situation as well.
Yeah, very, very important to not be rushing.
Exactly. This business loan, this business is your baby. You really want to, take care of it, and you want to value the relationships that you're forming. So I would say rate and term are really important, but also just who you're going to be working with, what their reputation is in the community. Those are all really important things. One thing that's very different from on business lending from personal lending is personal lending can be a very black and white experience. For a personal mortgage, an auto loan, one, there's enough data. Almost everyone has one of these things. So it comes very down to debt to income. Where's your credit score at? Okay, this is about how much you can afford, how much you can qualify for. When you look at business lending, it's different. It's a lot more relationship driven. It really very much works in the gray area because, I may be qualified to run X business, but not qualified to run Y business. Um, Anyone here in this meeting, you all have special skill sets that lend you to be successful at what you're looking to do. That doesn't mean you can do the exact opposite and say, well, I sat in on this webinar. I know how to run a business. I can run any business, because more than likely that's not the case. So it's really understanding personally and being able to articulate it to someone else, whether it's your mentor or a lender, of why you're the right person to bring this right idea into the market. The team and the timing tend to be the most important things behind a business's success. And then the concept or what the business is tends to be tertiary. So, when you think about that, it really comes down to the people behind the business. Is the timing right? And then what are you looking to do? I always say that we can all think of 1,000 mundane, boring businesses that aren't doing anything exciting that can be very successful. And there's plenty of really exciting business ideas that don't get off the ground because maybe the team and the timing weren't right. So those are some things to keep in mind as well. So yeah, being able to kind of understand what your loan funds are going to be used for. We talked about that a little bit on the prior slide. So if it's used for building out a leased space, you're going to want to understand that that's going to be a shorter term. And you may need some extra support, whether it be an SBA loan or working with Fame for a loan guarantee program. And I can discuss high level what that is, but I would recommend meeting with either a lender or score mentor to go into all of the nuances of what that looks like. I always say the easiest way to understand the loan guarantee programs, whether it's with Fame or the SBA, is look at it as a loan insurance for the lender. So anytime there's a situation where a bank may not have a secondary form of repayment because there's the cash flow from the business, but the collateral isn't, a bank can maybe take, a home or a vehicle or a piece of equipment and sell it. I can't sell an oven. If you as a baker can't sell your baked goods and pay the loan, I definitely can't because I'm not even qualified to be a baker. So the bank it really only has that first form of repayment. Usually in that circumstance, typically a bank would decline the loan. Fortunately, both the Finance Authority of Maine and the SBA have said we want to see more of these businesses, coming to light that are leasing spaces that are, the bread and butter of our Main Street communities. So they offer a program for banks to partake in, and they allow banks to take a little bit more risk and do these sorts of projects. So it's something that I have familiarity in doing. Is that SBA? It's called the 7A loan program. One thing that's important to understand with that program is it's not uniform. If you meet with Bangor Savings Bank, Kennebec Savings Bank, and Machias Savings Bank to talk about an SBA 7A loan, your rates, your terms, what they may be asking you could all be slightly different. The SBA sets a broad guideline for banks to partake in, but you're still getting a Bangor Savings Bank or a Machias Savings Bank or Kennebec Savings Bank loan. So that's really important to understand. It's a misconception that a lot of people have is that an SBA loan is an SBA loan is an SBA loan. But really, it is different on whoever you're working with as a lender. And you do have the ability to choose the person that you'd like to work with and the bank that you would like to work with for that. So that's high level. There's tons of nuances to it, but that's really what you need to understand. And it's not more beneficial or less beneficial, I would say, for you to partake in those programs. It's really the lender's going to say, okay, I like this project, but I think that we need this too. It's called a credit enhancement. It's going to make the deal a little bit better for the bank, and then we can do it. It doesn't put you at a advantageous spot, and it's not that you need an SBA loan when you could qualify for a traditional loan. So those are some
Yeah.
important things to understand.
Yeah, we've got Arthur asking, just confirming it's a 7A loan.
Correct. So the SBA has multiple loan programs. The one I was just describing is called their SBA 7A program. They have SBA 7A Express and traditional. And, sometimes the loan amount is going to dictate that. The programs work the same. Some of them only cover up to 50% of the loan loss, where others cover higher. But again, that's going to be more on your lender really dictating that conversation. But it is important to know, if turnaround time is really important, potentially knowing the history of that bank and doing SBA loans.
Hmm.
And SCORE works with a number of banks, but I do know that they have some that have had past success with SBA loans and can discuss that with you.
Absolutely. And then we also have Harold asking if credit union provide the same service.
That's a great question. So I can talk a little bit to credit unions, but it's credit unions are very different than banks. And I don't believe, I won't touch to it because I don't know if they can partake in the SBA programs. My understanding is that they don't. But one thing to understand about credit unions is credit unions are all considered nonprofits. So their regulatory environment is completely different from how banks are regulated. So they don't have to collect the same documentation. They don't have, the FDIC insurance. They have another program. So credit unions are very different than banks. They get portrayed as very similar. Traditionally, credit unions are known for offering products to individuals who may not qualify for traditional, bank products. That's kind of great over the years as people have just become, familiar with using credit unions, whether it's for their shared, banking features. So that's something I can only talk to a little bit, but the regulatory environment for credit unions, that the tax elements where they're nonprofits is very different. So traditionally, they have an experience in personal products, but I know some credit unions that have done business lending and helped businesses in the past. So that's
Cool.
all I can really say to it. I'm not an expert in that.
All right. Well, great questions, everyone. Thank you.
Yeah. So we talked a little bit about the bullet points here on the slide, and I'm not just going to read things from you, but one thing to really understand, if this is like the one piece that you take away, which I hope maybe you take away 1 to 2 things, but if this is one thing, almost any banker is going to really be trying to understand these 3 factors. They're considered the 3 C's of credit. You don't need to remember that, but it's the 3 main pieces that impact your likelihood for approval for a business loan. So the first is understanding the cash flow of the business. So if it's an existing business, that's going to be shown on your tax return, or if you're managing like QuickBooks with a profit and loss statement, that's going to really understand the income and expenses that your business incurs. If it's a new business or if it's changing locations, you're going to want to put together financial projections, which SCORE can assist you with. And those projections are going to show, with this loan, this is what our projected revenue is, this is what our projected expenses are. And you're going to want to include some assumptions of where those numbers are coming from. Again, sounds obvious, but as you're going through that process, it's something that often gets left out. So, and the reason for doing that isn't to check a box and say, okay, now I can apply for a business loan. I would really take writing a business plan and writing your financial projections really seriously, because it is the first line of defense to help you understand the likelihood of success for your business. As someone whose family has run a small business, and as someone who works with a lot of small businesses, it certainly is not easy work. It can be really fulfilling. It can be really successful, but it is not a get rich quick scheme, and it is definitely a lot of hard work. So a good lender is going to want you to be successful. They're not going to want to just necessarily approve your loan just to approve your loan and move things forward. Potentially in larger markets, you see that happening more. Here in Maine, we're all neighbors. We all probably know each other through, if you go 4 connections deep, we all have probably met one another. It's a very close knit community. You don't want to do something that's not going to be in the best interest of that individual. And that's what your lender is really going to be looking at when they're looking at your projections is this reasonable? Or is it really a stretch? And there's a chance that this person could be in a tough situation. And I've seen it both ways. And, I've seen projections where you can see they said, well, here's how much I need to pay in expenses. So I'm going to make the revenue match it so it works. But in reality, you're not going to sell 500 pizzas every day. So, understanding the seasonality of your business, if there is seasonality, and making sure those are a part of your projected cash flow is going to be really important. And your lender is going to be able to know if that's not the case, if that time hasn't been taken. But also, it's the first line of defense of protecting you as a business owner. So the second C in this 3 C's of credit is collateral. So we've talked about that. That is, what is the bank taking a security interest in? So for a purchase of a home or a purchase of a property, that's in the form of a mortgage. The bank files a mortgage, that is our secondary form of repayment. If it's accounts receivables or if it's, equipment and leased space build out, it's usually what we do is file something called a UCC. Rather than it being the registry of deeds, there's a filing system if you're filing for all business assets. And essentially it's saying this business has a loan with X bank, and we have a security interest in whatever this business has for assets, because if they're not repaying the loan with cash flow, they're going to look to see what they have for what does that business own that could be sold to then helpfully repay the bank. So that's usually how collateral is taken for lines of credit, but it's also how other types of requests can be secured. And then the last piece is character and your personal guarantee. So as I said, any of you individuals that are here, what you bring to the table is one of the most important things to the success of your business. It's your background, it's your relationships with your customers, it's your passion for what you're doing. That is the catalyst for why small businesses are successful. So the bank's going to really want to understand who you are, which is why another thing, as I said, talk to your banker as early as possible. The more that they get to know you, the more that they get to build a relationship with you, the more likely that they're going to be able to, articulate the why to underwriters, to senior loan officers, to get the approval to get you funded. It's not a black and white thing. So if they don't know you, they can only do so much to really tell your story. So telling your story to your banker, allowing them to understand, the why, will allow them to be your best advocate to whoever is that next stage of approving the loan. So that's that character piece. And then there's the personal guarantee piece that goes along with that. So any business owner with 20% or more ownership typically is required to provide their personal guarantee for any loan request. I say typically, that's 99% of the time. There's very few instances where I have seen it not be the case. Times where a personal guarantee isn't required is a publicly traded company or a nonprofit. And along with nonprofit like cooperatives, situations like that sometimes don't include that personal guarantee piece because there's technically no owner. So if you have ownership interest, or if you're looking to bring on investors and they're not comfortable with providing a personal guarantee, talking to the banks you think you'll be working with, but just understanding as a general rule, as an industry rule, it tends to be 20 to 25% ownership is the threshold. So you may want to keep any, investors or, silent partners less than that amount. That's not to say that a bank may not request their guarantee anyways, but from a policy perspective, the industry is 20% or more. It's expected that they're providing their personal guarantee. And that is essentially the third form of repayment. So if the business isn't paying us, what does the business have for assets that could be sold to pay us? Okay, the business can't pay us. What do the individuals that own the business have that can pay us? As I say at closing, it's essentially when your business is so successful and it just chooses to stop paying the bank and you're sailing off into the sunset, that you as the owner are still obligated to pay the bank. That's my fun example to it, but that is something that you'll want to consider with bank financing. Grants, sometimes community loans don't require that, but it is pretty standard for most traditional financing. Any other questions so far? Some great ones came up on this slide. So, okay, great. Ooh. So yeah, we talked a little bit about this, but really, some of the important things you're going to want to have, or at least be working on when you're meeting with a banker, is a business plan for your business. Even if it's in an existing business, if there's going to be some significant changes with the request for financing, like a new location or purchasing a property, or we're trying to hire 5 more people, by doing a growth plan, you're going to want to have a business plan that really sums up, who you are, why you are, and what you're looking to do. Addressing any industry challenges. So, staffing's been a challenge for a lot of businesses. So a lot of banks, as well as, other stakeholders such as mentors are requesting, yeah, what's your plan for hiring? What's your plan on employee retention? Because that's become a real challenge for a lot of business owners. So you're going to want to think through some of those potential challenges, as well as why you're going to be successful in that business plan. It does not need to be 50 pages. I've received 50-page business plans that are missing key parts of just the basic: who are you? Why are you? What are you looking to do? Where are you looking to do it? Why is where you're looking to do it going to be successful, etc. I've seen 3-page business plans that are extremely thorough, put together, and I understand who the business owners are. I understand what they bring to the table in terms of background to make this successful, who their customer is. One thing that I've seen that is not necessarily the case is, who's my customer? Well, I sell pizzas. If you look up how many people bought pizzas last year in Maine, it was this amount. So my market for pizza buyers is, 1 million people. Well, more than likely, you're not going to be feeding that many people that year. So who, really getting specific on who your customer is will allow you to, one, allow your pricing to make the most possible sense. Allow you as an owner to understand, is there enough of these type of customers to support my business? And it'll allow the bank to have an understanding that you've taken the time to really, dive into the details of this business plan, because you are ready to dive into the details of running your business. The financial history, financial projections. Again, I've talked those two multiple times throughout this presentation, but they're really important. One thing that a banker will probably provide you with is a personal financial statement to fill out. So that'll help them understand how you're going to support that personal guarantee. We don't only do loans to millionaires as bankers, so don't feel like that is the case with that personal financial statement. It just gives the bank an understanding of what potential fallback you may have as a business owner. So I've handed them to people that, they're all in on their business. They may be young, they may be old, but they're all in. They don't have a ton of fallback, but because the business plan, the financial projections were done really thoroughly, it wasn't an issue. We were still able to approve the loan. So just don't be intimidated by that. If you have questions on the form, it doesn't always look the most straightforward. Your banker should be happy to help you with that. I keep saying, things about your banker. If they're not doing these things with you, it may be one of those options where you want to talk to some other people, because, your banker should be really vested into taking as much time as you need to get a good understanding of what you need to do to apply for financing and be successful. Information on your collateral, showing your second sources of repayment. If you come to the table and you can address some of these things right off the bat, it's going to put you at way ahead of the typical peer group, I would say. And then lastly is sources and uses, which we really dive into on the next page here. But any questions on this before we move forward? Okay, great. So sources and uses. This is a table and this is a very complicated transaction example here below. It is unlikely that your transaction may look similar to this, but the more sources, the more uses, the easier it is to kind of visualize what I'm talking about. So when you're coming forward to a bank, one thing that they're going to want to understand is how much you're putting in towards the project, whether it's an equipment purchase or whether it's a business acquisition or whether it's a real estate acquisition or you need some working capital, as you can see in this transaction. It's really understanding the full use of the funds as well as all of the different sources that it may be coming from. So, and one thing to note is if you're using a home equity loan, that's not the same as just having cash in a savings account. If you're getting gifted funds, especially via an SBA loan, that has to be documented as a gift. Is it a gift where you're going to repay them in a year, with a few extra $100? Well, that's a little different than a gift. So really understanding the full sources and the full uses of the funds. And I would say, and I'm not assuming anyone in this group would do this, but you're not going to trick the bank. The bank is going to track to see where the sources and uses of the funds are, where the sources of the funds are coming from, and where the uses are. So making sure that you take your time to really get specific. If there's any construction or if there's any sort of, if especially construction or a build out of a space, articulating where you came up with those estimates. So rather than, you may put in your uses construction cost, 500,000, but then in a separate part of your business plan, you're going to want to break down what that 500,000 is being used for. Grants, if you own land and you're doing a build up project, that land can be looked at as equity. So there's a lot of different ways that a sources and uses page can look. But if you come prepared with this, your lender is going to be blown away, and it gives them a better understanding of what they can do for you. So typically, and I say typically very broadly, it depends on the project, depends on the type of business, depends on the industry, depends on the individual. But there is a language called loan to value or loan to purchase price. Usually a bank will only finance at a maximum up to 90% of a project. So you'll want to be able to bring in at least that 10%. 10 to 20%. 20% is pretty standard for a lot of projects. There are projects where you get down as little as 10% into the project. If you're significantly less than 10%, I'm not saying don't talk to a banker, because they may be able to say, oh, well, you have equity, you're just not utilizing it in this transaction, the way that you were doing your calculations. So you can still talk to a bank, still talk to your score mentors, but be prepared to bring some cash to the table or equity in that 10 to 20% range. There's times where it's less, you want 25%. There's times where it's 10%. It just depends on the project. This tends to generate a lot of questions. So is there anyone who wants to discuss any examples or have any questions on that?
Yeah, we do have one from Elena, I believe. Seller's note on full standby. What are conditions and characteristics? What's the term of the note? Interest rate associated with it.
Yeah, that's a great question. And it is completely vague and broad. So seller note especially tends to be really dictated by the seller and the purchaser. So if it's, someone you've worked with and they're saying, okay, we'll serve as a seller, or if it's complete stranger, a lot of times those terms look differently. One thing that's very consistent and banks are going to require is that the seller note is subordinated. So put in second position to the bank. The bank's not going to want to go second behind the seller. A lot of the times, what I've seen, especially if it's an operating business, is the seller won't take payments for the first year. And then usually within a year to 5 years is when that loan matures. And the thought process is taking a seller note is a way to put the bank at less risk, make it more likely that the bank will do the transaction. Then the business or the property gets established. You build up some equity. You can pay off the seller note by refinancing with the bank and increasing your bank loan within that year to 5 year time frame. Interest rate tends, I sometimes is higher, sometimes is lower than the bank. Rates have been interesting to say the least at this time. So, sometimes a seller note will take, a 5% interest rate that'll get paid out at the end. Other times it's 10% and they're getting paid interest monthly, but they have no principal payments until the end. So you see something called balloon payments a lot, where they're making a smaller monthly payment, but at 5 years they're getting a lump sum. And the goal is that the new owner of the business would then refinance that seller debt, pay them off, and put it as a part of the bank loan. But I've also seen where the seller is, they're doing a seller note by essentially they're remaining on the property for another 12 months, 18 months. So if they think they're going to retire soon, they're trying to sell the property, they're saying, consider our lease payment. Like, don't charge us a lease payment for the next year, and that's our seller debt. So it can look very different. Usually you're going to want to have it verified by an attorney, especially if it's coming to the bank. But it also kind of depends on the dollar amount. If it's $20,000 worth of seller debt, it may not make sense to hire an attorney for $5,000 to prepare the documents. So that's a great question. It really just depends on the type of business and the seller. Some people won't do it. Some people really want to see their legacy continued and get really flexible with that seller note. They may stay on as a mentor for a year, or they may go to Florida and never talk to you again. So it really just depends.
Yeah,
Any
great
other?
question. Hopefully we covered everything you were looking for. Anyone else? All right.
Great. So yeah, few just big tips and big takeaways. Is I highly recommend banking local. And the reason is it comes down to that relationship piece. A lot of your local banks are going to be able to have a better relationship with you and understand the nuances of what you're doing as a business. Building those relationships with the bankers. One of my favorite success stories was someone who owned a food truck, and they wanted to eventually become a brick and mortar space. We met and we would talk about monthly, and we did that for about 6 months. They had no space identified. They were working with SCORE to build a business plan and projections, but that would change depending on spaces that they were looking at, location, the size of the space, how many seats they had, and the restaurant. It was all impacting those projections and business plan. They finally came to us, and unfortunately, the market had become banks had gotten more conservative. Rates were really high. It was really tough to get lending out for restaurants and doing that type of a loan. But because of the relationship we had, the submission form that I provided, our bank's leadership, was about 10 pages, and it was about the character, the resilience of this individual, because we've known each other for 6 months, and I've watched them, not win leases, and how do you pivot, how do you adjust. I got to see the relationships they had within the restaurant community in Portland, which alleviated the concerns about staffing. So because of that relationship, we were able to do the loan, and they were able to open and become successful. So the relationship really does matter, I would say. And then the other thing is know your business, but that doesn't mean know it all. So get help where you don't understand something or you have questions. Use banks as a resources, use SCORE as a resource. I'm going to list off 50 resources in this next slide, and there's even more that aren't mentioned there. But know your business to the best of your ability, and then talk to resource partners and allow them to tell you what you don't know, and embrace it and work with them, and you'll be successful. So yeah, your bankers are a resource. The SBA's office directly has a ton of great resources. Brad Curry, who I work with on a regular basis, sits right in Portland at the Custom House. He loves meeting with business owners. There's a million other resource partners that the SBA is involved with that can help you as well, including the Maine Small Business Development Center, SCORE, FAME, which is the Finance Authority of Maine. There is CEI, which houses the Women's Business Center. E for All, which is an entrepreneurship program based out of Massachusetts, but have done some similar webinars here in the state of Maine. MTI has different grant opportunities. The Apex program is an SBA program. So if you need to get your certification as a woman-owned business or a minority-owned business or a veteran-owned business, they can assist with that for free. They'll also, if you're an existing business, can help get you marketing to government entities. So that can be the city, the state, federal contracts. Really interesting program there. Your local chambers of commerce are great resources to do a ribbon cutting, provide you some marketing, build relationships within their member network. Economic development offices and corporations, they look different from region to region. The city of Portland has something called the Portland Development Corporation. They have a loan fund and can do projects when a bank may not be able to. So they have a board of directors that manages a loan fund, and again, they're incentivized to keep small businesses opening in Portland and can provide funding. Or let's say a business owner only has 10%, they'll provide another 10 to 15% for that project, puts the bank in a more comfortable position. And partnerships like that happen all of the time. So there's tons of resources available. Most of them are free. So I really encourage you to just take advantage of them. And, this can be a really overwhelming bit of alphabet soup. That's unfortunately just the way that it is. But just start somewhere. Start with one resource partner, work with them, They're not territorial. They're not going to not tell you to go talk to someone else. They want you to be successful. There's enough entrepreneurs and enough resource partners to go around. So just take advantage of them, whether you're an existing business or a startup, I would say. And then, yeah, I'm happy to answer any questions that people have. That is my email and cell phone. So if anyone has really specific questions, I'm happy to take things offline at any time. You can text, email, call, and I love working with businesses. So I'm always happy to help there. There's a few other score slides coming up, but I'll let this one sit for just a minute. And
Yeah.
again, this was recorded, so this, if you need to watch me stutter again, you're more than welcome to rewatch this. But
You did a great job. It's great, important information, and we appreciate you coming in, Nate. We do have one from Harold. Just a general, how conservative would you say the banking environment is right now?
that's a great question. I would say it kind of depends on your industry right now. But one of the main challenges that banks are having is uh, how they're funding their loans, is one of the things. So part of it is going to be the industry that you're going in and the location. So banks have to maintain certain concentration limits, which again, it's very, very technical. But I looked at a self storage facility the other day. Kennebec has a lot of self storage facilities, so it was something that was more high risk to us. But a bank that maybe doesn't, it may not be as high of risk. But in general, right now, a lot of local banks are relying on funding from the Fed just because of the way that the interest rates have been. So it's keeping interest rates high, which is keeping funding moving a little bit more slowly.
Hmm.
But Harold, I would be love to learn a little bit about what you're looking to do. And again, we're still doing loans. Kennebec's still doing loans. Banks as a whole are still lending. So there's still great projects that can get started. It's just kind of understanding all of those resources.
Yeah, and Harold's got another one I think is actually pretty cool. And in your personal opinion, do you see a need for any specific type of business right now?
Oh, that's a great question. I mean, one that comes to, and this is kind of me taking somewhat of my banker hat off, but also not, as someone who's just lived in the state of Maine, is I think that there is an immense need for anything trades related. I know that I've had a lot of success in growing small 1 to 2 person, whether it's a contracting firm, an electrician, a paver, anything there. And they go from a 1 person job in their 20s, and within 5 years they could be making really, really strong revenue, I would say, and get to employ a team and serve in that role. So I would say that demand for that has not gone away.
Hmm. Absolutely. We are always in need of, more tradespeople. And we have Elena with another one. Are there any industries you won't work with?
Any that are illegal, which is kind of
Fair.
obvious.
Yeah.
But if you are building a warehouse for cannabis growers, getting bank financing for that is really challenging. An industry that is high risk, but I have done a number of loans for, so it's not that it doesn't happen, are restaurants and hospitality. So if you're looking to go into restaurant and hospitality, the more research you can do, the better. You see restaurants opening all the time. They're not doing that without loans. And again, that's something that I have specialized in over the last couple of years, is that type of financing. But I will say you may run into lenders that are just saying, yeah, that's something that we can't do right now, because it tends to be higher risk.
Yeah. We have one from Liz going back to trades businesses. Are there any specific types of funding available for them?
That's a great question. I don't know all of the nuances of every resource, and there's different grants that come online and go away. I do know from an education perspective. So if you were looking to get into the trades and get certain certifications, AGC is a great resource. So the Association for General Contractors, and they can provide certain certifications or trainings. Their resources are very broad stroked, I would say, and they work throughout the entire state of Maine. So that's a great place to start. I would say a lot of those businesses qualify for and do really well with traditional financing. And the reason is, even as a startup business, banks see that the immense need out in the community. So you're more likely to have your customer there. You're more likely to have revenue coming in, and you're more likely to have equipment to back up that loan even further. So I would say
Hmm.
traditional loans tend to be a great option for someone looking to do that. And there are banks that will take a little bit more risk and loan up to 100% of equipment values if your business plan is strong, if your projections are strong.
Hmm.
So that can be
Yeah,
a way that you can get started with not a ton of cash, but if you have the right experience, you can still be successful.
nice. Yeah. And Harold with one more. Just thoughts on a secured courier business.
Ooh, can you? Well, I guess I won't ask all of the nuances. So,
Hmm.
like, I'm curious what you mean by secured, but I mean, courier
Hmm.
businesses have done really well. There seem to be only a few.
Yeah, I had used one recently. I left my car key. I had one of those wireless keys, and so my loaned my car to someone, and they drove off with, and I had the key fob, so I had to have a courier come pick it up because they couldn't turn the car back on to come get it.
Oh,
So,
geez. Yeah.
I mean, I've found use in them personally. Maybe a little bit of competition for the only one that services Portland would be good.
Yeah. No, I know that our courier service right now only goes about once a week. So there's
Mm,
definitely a need for something like that. And it's just identifying your customer. I mean, if you look at the pen that anyone has been taking notes with, someone's making that.
mm.
Someone's making the little spring that goes in the pen. So one customer that has been really successful that I've had a lot of success working with, they make a part of something that goes into the part of something else that then builds the end product. And they have a big manufacturing location in Sanford. So
Mm.
it's really can be really specific. It can be very broad. Um, I would say that there is just a need for more small businesses, and just being able to articulate your customer is really
Mm.
great. And Score will help you really dive into the details of identifying that market. So,
Absolutely. That's what we're here for.
yeah.
Well, if anyone else have anything before we wrap things up here today?
Okay. Well, I
All
will
right.
move to
Yeah.
the last slide here. So, as much as I love that my contact information is here, almost more importantly is some details on Score here, and then there's a QR code that'll direct you directly if you want to apply for a Score mentor.
Harry,
So,
we do have a business plan template on our website. I can send that to you once I send out our evaluation. I'll include that in the email I send out.
let that one sit here, and then lastly, I'll just go to this one. So,
Yeah. If you
I
don't
guess
have a
I,
score
I take it
mentor,
back. This is the one takeaway that you all need. Forget everything
absolutely.
I said, but really, utilize Score. They're an incredible resource, and they're all excited to work with you. They're going
Yeah,
to ask you hard questions. It's because they want you to be successful, not the opposite.
we'd be happy to get you guys to the point where you can talk to Nate and his peers about, getting things off the ground. And yeah, if you don't already have a mentor, that code will bring you right to the form to fill it out and apply for one. I know we have a bunch of our mentors that attended today, and we love them and appreciate them. And we're happy to help with any business, small, large, idea you have. And if one more thing, I guess, one question coming in right at the end here, Elena, SBA loans, do you go outside the geographical state of Maine? I would imagine that it would just get sent out to the local SBA office at that point.
It just depends on the bank that you're working with. So again, it's not necessarily the SBA loan. It's a program that banks can partake in. It's not a loan from the SBA. The SBA has done a few direct emergency loans around the pandemic. But again, so it would be if the bank that you're working with locally here lends outside of the state of Maine. Some do, some don't, some have certain caveats. So some Maine based banks will only lend in Maine, others will lend in New England. And whether it's an SBA loan or a traditional loan, that policy remains the same. So again, the SBA piece is just a program that bank is taking participation in.
Awesome. Well, with that, I want to thank everyone for attending today. As I said before, we were recording today, and the recording of this will be sent out either later today or early tomorrow. Also be sending out a copy of the slide deck for everyone to come back, have a clickable link for Nate. And if you wanted to get in touch with him too, I'll also be including that in our follow-up email. There's also a short survey to fill out that will be sent to you if you wouldn't mind filling that out. It helps us, focus on our workshops and see what we need to do, get things going, and maybe new topics, different, all sorts of fun stuff. And one more reminder, us at Score Main are free confidential one-on-one business mentoring on whether you're starting or growing your business. And it's real easy to request that mentor with that QR code showed earlier or just visiting score.org. And we're a nonprofit partner of the SBA and with 240 chapters across the country and three of them right here in Maine. And if you're looking for a mentor, we have options across all three districts in Maine of in-person or Zoom or over the phone. And I want to thank Nate again and Kennebec Savings for helping make this possible.
Yeah, thank you guys. I hope you all have a great rest of your day and stay cool out there.
Yeah, you too, Nate. Thank you so much.
Thanks, Jasper. Take
Have a
care.
good one.